Iron trades.
Okay, welcome to Mastering Candlesticks and Candle Range Theory. Today we're going to be discussing the primary core function of CRT scalping and the general recognition of candlesticks and candlestick patterns. First, the housekeeping. As always, nothing in this coaching constitutes financial advice. Lessons will be recorded for ongoing use, and coaching is a self-driven educational partnership. There are no specific trading results guaranteed as an outcome of education. So why do candlesticks matter? So we're starting from square one here, and trust me, this is going to sort of level up the thinking because this is a really core foundational concept, and a lot of people, traders new and old, overlook core tenets very quickly because it's the basic stuff, it's the building blocks. So candlesticks are more than just green and red bars. They're a visual psychology. They reflect the real-time battle between buyers and sellers. Each one is a reflection of who is being aggressive, who is absorbing, and whether that aggression or absorption is sustainable. One candle on its own might seem very simple, but single candles have meaning, and it shows us where there are imbalances. It shows us where there is exhaustion or where some dominance might be occurring. Then we move to a cluster of candles. Now we're starting to form a narrative, and that means intent. The big mistake a lot of new traders make is trying to memorize patterns, kind of like flashcards. Oh, I see that's a hammer, that's a doji, that's bullish engulfing, like just sort of listing them off like flashcards. But that's not how candles are meant to be used. Patterns aren't rules, they're the context, they're clues to what is happening. The real question that everyone should be asking is, where is this forming? Is it at the VWAP? Is it a supply shelf? Is it filling into a gap? We're looking for the pattern and these building blocks around the structure that surrounds it. We're not just looking at candles in a vacuum. And that's a mistake that a lot of people make really early, and a lot of people continue to make, is that you see a setup and you say, this is what that means, 1 + 1 = 2. But much like many things in the market, everything is contextual. Everything is structure-based. Everything is variable in a zone rather than a hard line. So today we're going to go a little bit deeper and not just look at the candlestick types, but how to use them, how to insert them dynamically into a framework. And that's CRT. The CRT gives you that structure and that precision so that you're not, reacting late or you're not jumping the gun early. It means that you want to be entering with intent based around the structure. Candle anatomy. So the language of price, what we just talked about. So we're going to break down the actual structure of a candle, and you can stop guessing and start interpreting. And that's the goal with everything here, is that we want to be able to read the tape like we're reading a book. The body is where the open and close happened. So that tells us who won the session. And when we say session, we're talking about whatever time frame you're on. If you're on the 1 minute, it's a 1 minute session, 1 minute candle. If you're on the hourly, it's a 1 hour, 5 minute, 5 minute. If it's a thick green body, buyers dominated, and if it's a thick red body, sellers had control. The wicks, or the shadows, the wicks that come up and down from the top and bottom of the body, they show where price traveled, but it couldn't hold on to. And that's critical to know. If it's got a long upper wick, for example, price went up, but the sellers overwhelmed and pushed it down, and that shows weakness. If there's a long lower wick, sellers pushed it down, but the buyers stepped in strong, and that shows support. So when you see a candle with a tiny body and a big wick, especially at a known level, like a support level or a VWAP level or something, that's a big signal. That's context. That's the market telling you it's unsure, or buyers or sellers are unsure, or even stops were just run. It was a liquidity sweep or something along those lines, but it's contextual. And one of the most powerful clues, and I look for this, is a candle with no wick. So if you've got a very large green candle, closes at its own high, and there's no wick to the upside, it means that the buyers pushed all the way to the top of that range. That's initiative buying. That's clean, that's confident, that's aggression. That's buyers pushing, and sellers are unable to take any control. And same thing to the downside, with a strong red close all the way to the downside with no bottom wick. These candles don't just happen randomly, they represent urgency. In this case, they represent urgency. And your job as a trader is to read that story, not just the shape, not just the color, not just the wicks, but read the story, the narrative that it's forming. What price was it trying to do? What happened in response? What was the outcome? So these are the things that we're looking for. Now, anyone who's watched some of these videos knows that this candlestick chart is normally at the front. It's more appropriate here in this particular presentation. So some of the more common candle patterns that we're going to treat as tools, and let me reiterate, nothing here is a magic signal. None of these happen and it's an automatic, okay, this happens, so this is the next outcome. It's all narrative that you want to be looking at and interpreting. But some of these candles that I'm going to list out here are some of the most common, some of the easiest to identify, some of the most known outcomes that you will see in a high percentage of times when you see these formations. So engulfing candles, and first I'll just highlight them with my cursor over here. You can see bullish engulfing, second from the top in the middle, bearish engulfing, second from the top in the middle. So these are powerful, but only if they're where they're supposed to be. A bullish green engulfing candle that swallows a red one at a support level with volume, that's a shift in control. That's not just pattern recognition, that's context. At a support level, expanding volume, bullish engulfing, that's a change in behavior. That's a reversal. Doji candles, for example. So we're going to look, there's different types of dojis, but for example, up in this top row, you can see a dragonfly doji. Over here, you can see a gravestone doji. It's a very small body, very long wick, essentially. This signals indecision, but more importantly, they signal a pause in commitment. If a doji forms after a long run-up, it's often a stall before either a reversal or a continuation. And that, what I just said is, it's either going to keep going up or go down. But that's the context that you need to insert. You don't trade the doji, you trade what comes next. You see a doji and you say, now I need to wait to see whether it goes up or whether it goes down. And that's the narrative that you form, and then that's the trade that you enter. Hammers or inverted hammers, so very similar to the doji. You can see top row to the left, you've got a hammer, and top row to the left over here, you've got a shooting star, which is an inverted hammer. These are very long wick candles, but the direction of the wick and the location of the candle matter more than the label of hammer. Same thing as the first one we talked about with the engulfing, its structure. Is it a hammer off the VWAP? Is it buyers defending value? Is it an inverted hammer to a supply zone? And that shows sellers stepping in. So again, context and narrative. And then the inside bar, one more that we're going to talk about here, which, I actually don't know where the inside bar is right now. The bullish harami is similar to an inside bar, and the bearish harami is similar to an inside bar. So we can just use those as the context right now. This one is subtle, and it's actually really frequent, and it doesn't always result in an outcome, but it's something to keep an eye on. When used correctly, it's very effective. It tells you price is coiling. When you see a breakout from an inside bar near the edge of a volume shelf or a gap, for instance, that's a trigger. So if you have this tiny inside bar inside the previous candle and you know you're at a zone similar to the doji, on the next candles when there's a breakout or a breakdown, that's where you start the trade. That's where you get the context. But this recipe only works when you have the setup and the structure. So we're just going to flick over to the chart very quick, and we're going to look for some real examples of each of these. So the first one we're looking for is an engulfing candle. So this is the 1 minute chart on SPY today. And we're just going to very quickly look for a couple of examples, see if we can find them. So straight away, what we want to do is look for an engulfing candle. We want to look for a candle that fully engulfs in the opposite direction the previous candle that came before. But before I do that, I've just seen a great example. Right here, we can see a doji. So you can see, there you go. You can see this bottom candle right here. We've got price coming on the way down. We've got a dragonfly doji to the bottom, tiny body, wick to either side, almost looks like a spinning top, and then price reversed. Now, I don't have any other indicators like EMAs or price levels on, but yeah, you can see right here, it wicked off the 21 EMA. So that actually would have been a pretty good indicator for that doji reversal. So that's a doji reversal, great example right there. Let's see if we can find an engulfing candle from today. Actually, right here, that's another doji. That's another good example. Complete breakout candle, indecision, reversal. This right here, we didn't cover this, but this is a really useful pattern. So I'll come back here. This is called a rising 3 that we can see over here. You can see a very large green candle, red candles wicking down within, staying within the size of the previous candle, and then finding a flat line for their body, and the next candle engulfs all of the previous red candles. So you can see it forms an N pattern. It's another very powerful setup, and it's something that you can look for in both directions. If you've got a breakout candle and then the following candles all stay within the body of the first candle without breaking out, price is coiling, and you can generally note that a reversal is in play. Let's see, we'll try and find a hammer or an engulfing right now. There's a lot of reversal action from today. So it makes the identification of these candles is not... All right, here we go. It's a small example, but we have an engulfing candle right here. So this green candle, you can see that we had a red candle to the downside. There was a common body, flat line here at the bottom. And then our green candle engulfs the entirety of the previous red candle. And you can see that that actually formed the trend. It had a small pause and then continued to the upside. So that's an example of a bullish engulfing candle right there. Okay.
Iron trades.